Okay, so welcome to our weekly webinar. It has been a very exciting week last week. Although every day it is comparatively exciting, right? If we look at the entire week itself, it is basically a sideways movement. It's basically a sideways movement, but of course, luckily for us, a lot of our short position are in either huge profit or they are diving down by a lot. So a show of hand, who successfully diamond hand through the snowflake earnings? Anyone successfully diamond hand through the snowflake earnings? And also the Rivian shorts. 来 O up wow, so sad no one okay. Okay, that's okay. We still have quite a number of shorts. So during this period, right, shorting is one of the way that you can recover from any form of drawdown that you receive in January, which is why even as early as end of January or early Feb, right, 1st of Feb, right, we have all our webinar has been emphasizing that you should be preparing for short, get ready for short, go and get your margin account, go and get your CMC, whatever. So this period, that this January and February period, is a very crucial period where you are supposed to prepare for the eventual market transition. So the market is transitioning from a ultra bullish sentiment to a much more sideways, much more volatile sentiment. So you need to be prepared, and it is very important, because if you do not do all this, if you like always very headstrong, always looking for long, always like only come in after profit has been made, right, then you have already lost that opportunity there. So it is from during that initial drawdown where we start to lose a lot of position left and right due to stop loss, right? We have outright mentioned that we will get through this and get ready. So it's very important. Okay, it's very important. So let's go through the usual stuff first. Firstly, right, let's go through Singapore fund flow. Finally, DBS have fallen. DBS have fallen from grace. We can see the fund flow becoming extremely negative, like diving down already. And the blue color line, okay, the institutional fund flow diving down already. But even way before that, we have always been mentioning that at some point they will be coming down, because it does seem that the funds are rotating from DBS to UOB to OCBC. Then after they rotate to OCBC finish, right, most likely it's gonna drop already lah. And from our fund flow constituent, right, we can see that DBS minus 18 million outflow, but of course OCBC was hit the hardest lah, 290 million. Very sad, 290 million, and UOB also 107 million. So Singapore market no longer a safe place. Okay, it was slightly safe during the original period here, where during this period a lot of those folks that like to say US up but Singapore always red, they suddenly very quiet also. There's literally no noise at all. But somewhere around this period, we were very cautious lah. We were cautious. In fact, we were cautious here, but the market rally lah. But now eventually it fall back down. So at this stage, right, I'm not very bullish. I'm not very bullish on Singapore market. I think there is a good chance. That we might be seeing 3100. Okay, we might be seeing 3100. I'm not sure if you want a short. I mean, if you want a short, you can go ahead with it, but I'm not really gonna support this short. It's just market analysis lah. If you want to short, we can always short the US. There's a lot more stuff on there to short also. Okay, so this is the fund flow itself. But next, let's move on to my personal portfolio. So finally, positive for the year of 2022 already, finally positive. So during this period, right, during January to February to until now March, right, I do hope that even if you are not shorting or even if you are not trading, right, you can see for yourself the action, the portfolio management, the kind of short and long that I'm taking, the certain sector that I'm aiming. Hopefully you can follow this and apply to yourself in the future, even if you are not following the actual position, because drawdown is going to happen once every 2 years or once every 3 years. The market doesn't have to crash. Even right now, the market is not considered crash. It is still in the correction territory, like minus 15%, minus 16%. A crash is when you have like minus 30, 40% lah. So we have not crashed yet. So meaning even when there's no actual market crash, right, you are bound to get hit with drawdown. I don't believe any trader who will not hit with any drawdown during this period. They are bound to happen, and even professional trader on an institutional level, right, they will go through this period. There is no way for anyone to like suddenly, the only way you will not be hit with drawdown is you do not trade during that period lah. Like you are on a holiday or you are not involved in the stock market at all. So hopefully, right, during this period, you do learn and pick up some skills that allow you to recover and allow you to continue trading with the market, and make sure that you do not get like your entire account blown off by one drawdown period lah. Because if you miss this opportunity to learn how to recover during this January and February, right, then you have essentially wasted one learning opportunity in this drawdown period. So your next learning opportunity will be the next drawdown, where you'll probably blow your account, or you'll probably lose like 30-40% of your account again. So that is why bad market period are the period where you should be focusing more, you should be paying attention more, you should be looking at how to improve yourself rather than just like closing your door, go and hide one corner, like totally disappear. And then when market recover, everything profit, and then you start to come back again. But by then, right, you did not learn anything. And when market crash again or market correct again, right, you are back to square one. So make sure that you pick up something. I do hope that you manage to pick up something. So some of my update to some of my trade, definitely Snowflake profit very big time from the very big gap down. We still have Rivian, and for those who are still holding, I'm personally still holding Rivian and the children place, which earnings are coming also. So we are going to perform the same strategy with Snowflake by holding through the earnings, okay, because we are quite in the profit for these two positions already. So we can afford to be greedy and hold through the earnings lah. So if the earnings result good, then the price gap up or whatever, right, then it's okay. We merely break even, or we just exit with a tiny profit or maybe a tiny loss, doesn't really matter to us. But if the whole thing gap down some more, right, then we are going to get a lot more profit like Snowflake itself lah. So we need to know how to manage our risk, and this is the decision making skill that you need to know how to make. If you are coming to me and asking me, hey Zor, so Rivian can short or not, will it gap down or not, can tell me confirm gap down or not, I can't tell you that. That's not the way to trade, and I can't tell you this one 100% gap down or not. But what I can tell you is, can you risk this or not? And there's a reason why the short position was entered earlier at the top, so that we have some breathing room to ensure that we have that little buffer, so that we can hold through the earnings, so that we can like either exit at break even, or we get a lot of profit from another gap down, which I believe Rivian most likely should have a similar down move if the earnings result are not good. And I also think earnings result for Rivian should be more towards the bearish side lah. That, I mean, it's not because I'm short, that's why I'm saying that. It is because I feel that, that's why I am short. So it's the other way around, okay? But if you have not entered Rivian shorts, and only now after the price dropped like 28% from our initial entry, only now you want a short because I say that, okay, I'm still bearish, then that is not a good decision. That's not a good risk management decision, okay? So make sure that you manage your risk properly. So I have MasterCard. Unfortunately, MasterCard in a very big rate, but doesn't matter, because this is the whole point of a half long position, half short position portfolio, because MasterCard is red, but everything else is green. And eventually, if my MasterCard gets stop loss, right, it's okay also, because all my other shorts are green. And that's the whole point of it. Next, I have Golden Energy, which I enter and exit. So this one you guys will probably see on Facebook lah. It's a so-called public freebie trade lah. So hopefully the non-subscriber gets something out of it also, but I just enter exit quite fast. I enter at 0.395 and then exited at 0.44, mainly because I do not want to hold multiple energy counter. I'm still holding Rex International. I don't want to add another golden energy. I mean, even though it is a coal company, right? I don't want to hold two energy counter together at one go also. So I just simply run just get the profit run ready. I don't want to hold until like around 50 cent level like that. Then golden agri from like donkey years ago finally hit TP, so I exited fully also, mainly because I have ADM. That's why I don't want to leave any like trailing profit position behind, since I am already holding ADM also, so I exited fully. And then of course I TP on my Snowflake, but Snowflake I still leave a bit behind there, that they're still like hanging around there. So Rivian still holding, Rex still holding, the children play still holding, Mastercard still holding as per plan. So if you look at the profit position, right, you can see that my Snowflake is actually second highest at 4,600. But you have to know that before the profit, right, there was actually one loss on Snowflake, which was about $2,000+. So actually my latest Snowflake trades, it actually is about close to $7,000, which was still coming at second place. But this number here, it is the final number where it has already included the loss from the original short, which was stop out. Okay, so that's basically my current portfolio right now. There are some other counters that I'm thinking to short also. Actually, I have Starbucks. I haven't updated yet. I got Starbucks short also, which I've shared. There is so it's the usual. I'm always looking for things to long. But in the process of researching for things to long, right, I managed to find more things to short, which is a rough, I would say, a sign that market is still not very bullish yet right now. So at the same time, I don't really want too many short position also. So I'm kind of balancing a bit okay, and this is the kind of portfolio balancing that you guys should be doing also. Make sure, think a bit, don't something come out on Patreon and then just like go and enter already. Like don't even spend 5 or 10 minutes to look through and think through your portfolio a bit. Okay, if you spend less than 5 minutes before you enter a position, that is very wrong. That is very, very wrong already. Okay, so that's basically my portfolio. Hopefully I'm back to a total ROI of 40.73%. So this is actually from last year, 2021, and hopefully towards the end of 2022, I should be able to get a year to date of 40 or 50%. Slowly we move 1 month at a time, and we can, hopefully I'll be able to beat last year. So it is good that we are finally back into the positive for the year. And I kind of did not expect it to be so fast, because we were negative in February and we took about one month or 1.5 months to back into positive, which is, I would say, kind of okay. Back in 2020, the COVID-19 breakdown, right, it took me about 2.5 months, 3 months, slightly longer to get back into that positive mode. But because the recovery from COVID-19 was a V-shape, right? It was a V-shaped sharp recovery. It was pretty easy to recover from. But in the current market state, right, as mentioned in a lot of webinar and a lot of my video, it is not going to be a V-shaped recovery. So if you guys are still struggling to recover from here, right, make sure you are prepared for shorts. So this one I cannot reiterate enough. Make sure prepare for shorts. We have been emphasizing that since early February. So if up until now you are like don't know what to do, or you are trying to bottom pick your long and then you're stuck in your long for the next 4-5 months, right, you are never gonna beat the market. Okay, so make sure you are prepared for more shorts. Okay, so let's go through some of the indexes and some of the more potential shorts, so some of the counters that we have. Hong Kong. So Hong Kong, they're very bad, very jala. I think China is in a very bad state right now. I think in one of the Sonic R webinar, right, I mentioned that if you look at China, right, or Hong Kong, they are doing a lot of how to say, a lot of stimulus action, like they cut they remain their rates. They have no intention to raise their rates, and then they have some stimulus program also. And despite all this, right, despite all this action by government to prop up the market, right, the market is simply just not responding. And then last week, I heard on Bloomberg that China is experiencing a GDP contraction for the first time, like since don't know how many years ago, and that's very bad. That's very bad because everywhere else we have inflations and like record high inflation, but on the other hand, we have China experiencing GDP contraction despite the fact that there is a lot of stimulus action. And that is saying that there is something structurally wrong with how things are going on there. So I'm not an expert in China market or Hong Kong market. There are a lot of Hong Kong Chinese stock market supporter in my forum, which tend to get upset or tend to get very personal when I keep mentioning bad things about China stock, but I'm not going to go through that so much. But the key thing is you have to look at the price. You have to look at the price and don't go into something that is obviously coming down. So for those who have been here long enough, right, we have avoided Hong Kong market since here. Like during this first half, I think we have close to 20 or 30 Hong Kong trades. Then here, right, for the remainder until now, right, I think we have only like 3 or 4 Hong Kong trades within like the next from here onwards. And even these 3-4 trades, right, it is entered with the intention that, okay, let's test water a bit. This is not really like a legit all-in trade. I just want to stress test or test out the market a bit, but like these counter are stuck, or these counter have eventually hit the stop loss. Yeah, it's very bad. It's very bad. So right now, please stay away. Stay away. Yes, like Tencent, very value, very intrinsic value, don't know this and that. Baba, very value, good for money, underpriced, but whatever. Don't enter for now. Okay, don't enter for now. If you are a long-term investor, can hold for 30 years, right? Then okay, go ahead. But if you are a short-term trader looking to bottom pick, right? Now is not the time. Now it's not the time. Okay. So at some point, a lot of people run to Hong Kong market because US was crashing, but now Hong Kong is crashing. So that period was somewhere here. That period was somewhere here during like 10 Jan to 21st Jan, 24th Jan. That was the same period where we have the S&P dropping here. 14 Jan, 17 Jan, 20 Jan, like that. And there were a lot of people asking, wow, like US drop, but Hong Kong is going up. US drop, but Hong Kong is going up. But at that same time, we also have quite a few webinars that mentions that Hong Kong going up, yes, but it's creating a lower high. But at least S&P is creating a higher low. So please keep the bigger trend in mind, okay? So since we are talking about S&P, right, we are back here. We are back to like square one. For the entire of last week, nothing is moving. Even though nothing is moving, right, every day the movement is very volatile. Every day is like moving 3-4% like that. So it is quite volatile, but it is not moving anywhere. So once again, right, we have a lot of because of the sanction price go up, then next day because of this price go down, then the nuclear power plant fire price go up, but some news come out, nuclear power plant never damaged, then price recover, and then at the night price come down again. So a lot of people giving a lot of like it get ridiculous. It's very funny, like every single piece of news they are saying this is the reason why price up, but at the end of the day, at the end of the week, it is still there. So does it mean that everything is like discounted already? Or there are people saying, James Powell say that 25 BPS rate hike is confirmed already. So they say, the market have pricing already. If the market have pricing, then why is it like not even recovering? So once again, right, take all these news with a grain of salt, because on a daily movement, right, this news is just causing volatility. It is not causing the trend to change. It's not going to decide the trend moving forward. Yes, it can cause daily price movement where a lot of traders, a lot of day trader, a lot of market maker need to like provide all this liquidity to the market. A lot of day trader like trading around, a lot of people getting margin call here and there, right? It's causing a lot of these big movement, but it is caused by the volatility. It is not going to suddenly make the entire market trend go up, and you are not supposed to go and like immediately bull position all in on all these kind of news and hope that market bottom and market go up. It is not going to work like that. Okay, so try to keep yourself level-headed. Don't trade based on daily news. And yesterday NFP very high, very good, shock, but price drop. So like we always have those situations where market green because NFP very good, but now we have a situation where NFP good but market is still red. So there's a lot of correlation, but all these correlation, right, most of the time they are like on a daily candle basis, so try not to get too carried away. Okay, so my personal view, I think that market is currently still in the very volatile state. We have mentioned that as long as price does not break through here, right, and it does not break down here, we are in that extremely volatile state, and we are still in that extremely volatile state. So at this point here, market tries to break down, but thank God it recover. If it doesn't recover, right, we are in for a very big drawdown already. But now we are back to this level, but at the same time, right, it is not breaking out yet. And in fact, it does seems like we have a new resistance that's forming here. And market have a very hard time breaking above this resistance. It have tried multiple times to break through this, but cannot. So next week, right? If things continue to go down and it cannot break through this 4400 level, right, then I will be leaning more towards the bearish side. And that is the reason why I am still holding more short position than long position. And currently, short position are still the way to go. And what you will notice with most of our short position, right, even when the market recover very big green on certain days, right, our short position are still red or they are usually flat, especially last week. If you notice, there were days where market go up like S&P went up like 60 points, 70 points, but our Rivian, our Snowflake, they were either flat 1 or 2%, or they were like down by 1 or 2%. And considering that Rivian and Snowflake are very volatile counter, that they tend to go up 3-4% in a day, right? It does sort of make a stand that the counters that we are choosing to short, right, they are weak counters, meaning even if suddenly market recover, right, I believe these are the counters that will still remain very suppressed. So it is also to sort of prevent yourself from, let's say if a market recovers suddenly, you don't have all these short counters suddenly hitting your stop loss, and then you are back to square one also. It doesn't make any difference as all your long hitting stop loss now. Okay, so we need to be very careful with the number of shots that we are holding and the kind of shots that we are holding also. So this is roughly your S&P 500 currently. Previously I was kind of cautiously bullish, but now more towards the bearish side already. And once again, we have Brent crude and Western Texas closing at like the high. We always get tricked by the sudden retracement, all come back down, then suddenly next day open very high again. So hopefully this will make our Rex International hit TP. Rex International kind of like stuck there already. So that's one of the reasons why I'm still holding Rex International also. Okay, so aside from that, taking a look at the sector ETF, right, we still see energy being one of the best performing sector, which is why we have exposure to energy by Rex International. And congrats to all the RH Petrol Gas holder also who managed to get RH Petrol Gas. Why no Hong Kong short? Why your ADM 98? 73? Because this is in SGD. They very funny one. The conversion not done properly one. Why no Hong Kong short? Hong Kong, I don't really, okay, because when you want to short, right, you need to look at fundamentals a bit. You need to read some research report a bit. You need to look at certain ratio, revenue ratio, all this, right? And when it comes to Hong Kong, it's quite hard to find all this information, especially when I'm trying to find certain annual report, and they are quite hard to read, especially for someone like me who doesn't really understand Chinese, and the way they are presented is a little bit hard also. So that's why we are shorting US stock, because information are easier to find. Certain research report are easier to find. So it's much, the information are more easily available, which is why one of the very big reason why a lot of people love US report, because there's a lot of coverage. If you log in Bloomberg, if you go to Bloomberg Live, right, they'll be talking about US stock most of the time. And sometimes you can, like, sometimes they say, oh, like EV, the EV sector is dropping. It doesn't mean you straight away blindly go and short EV, but you can start to explore and look into certain EV companies. And that is also how I managed to pick out Rivian from the other counters. So why did I short Rivian instead of Tesla, since all EV what? It is because I'm able to look at certain fundamental aspect, which I believe compared to Hong Kong, it will be much harder to find. And even when I'm looking at NIO or Xpeng, right, the China EV, right, I find the financial report very hard to read, extremely hard to read, and sometimes I just give up lah. And I think Hong Kong, right, based on certain company, from companies to company, right, they have minimal lot sizing. So they are not like US or Singapore where the minimal lot sizing is standardized. Each companies have their own minimal lot sizing, and certain companies, right, the minimum lot sizing is so big that it's very hard to do your risk management. You either have to short a very big lot due to the restriction, or sometimes you can't even short at all. So there's a lot of restriction based on Hong Kong. And normally I'm also personally not that experienced with Hong Kong market, so I try to refrain from Hong Kong market lah. But of course, when things are bullish, everything go up, right, then we can definitely jump on the bull train also. But when we are in this very shaky, volatile, like up down market, right, it is good to avoid market that we are not familiar with. Okay, so let's look at certain specific counters. ADM is one of our best performing long counters. It was introduced in 27 Jan, right after the market correct, right after the tech counter crash, mainly because of the fact that this is a non-tech counter, not really that correlated to S&P 500. You can see it is not affected by any kind of S&P 500 crash at all. So it is a good alternative play, and so far it is performing very, very well. So you have to be sure that like you are present during the recovery period. If you only come in after the recovery period, right, everything that we enter already run. So you are not going to recover already. You are too late for most of the position already. Okay, so Archer Daniel Millen recovering. So okay, so Rivian. So I'm not sure who's holding Rivian since no one speak up just now. But if you are still holding Rivian, for example, you didn't TP 100%, you still have like 50% of your position, or you are still holding the full position, right? The earning is going to come out in 10 March, which is like next week. So similar to Snowflake, right? What I am going to do is I'm gonna set my stop loss to the entry level, the entry price level. So if let's say for some reason they have like surprise earning, or they say Amazon place more booking, which I highly doubt, or they manage to get some new contract and price shoot up, right? At least I'm going to get a break-even exit. Or maybe if price doesn't shoot up so high, it has to shoot up by quite a lot, It has to shoot up by 40%, which I doubt. Okay, so even if it shot up by 20%, right, I am still in profit. So this gives me a lot of leeway. This gives me a lot of buffer to play with. In fact, I maybe want to enter some more. I maybe want to enter a little bit more, so that when let's say if we gap up by 20%, right? Then instead of still in profit, I'll be break even lah. So I'll just work out the calculation to see how much I should add. Because if the earning is bad and it does gap down some more, right? Then I'm basically gonna get like maybe another 10-20% from one position alone, because this position itself, I have both a put option and a actual short position in play already lah. So both of my position are in profit quite big, and I can afford to play around a bit. So this is for Previon, okay? So next, sorry, if you have not entered this, right, then I cannot advise you, okay? If you only now then thinking to enter, I cannot advise you, because the stop loss is like way up there already. you cannot follow this stop loss already. It's already like this stop loss is where $80. It's already like almost 70% out. You cannot handle that stop loss. Okay, so I can't advise you. Please don't come and ask me still can enter or not. If you want to enter, you can go the YOLO way lah. You can go the YOLO way, put your stop loss here, and then most likely you're gonna get cut off by random noise movement lah. So that's the reason why I cannot advise you. You just pray that there is no sudden random up move that comes in. So next, the children place. It is the other shot that we have. So this is the same also. Our original entry is at $70 or maybe like $70 there. We are already in quite a good unrealized profit position. So once again, right, if you only thinking of entering now, unfortunately, I cannot advise you also, because you will most likely get stopped out by volatile movement lah. The stop loss is too far for you already. But similar to Rivian, right, I am going to do the same thing, put my stop loss to break even, and then I'm gonna just hold this through earning. So this earning is on the 9th of March. This is from TradingView. I've not checked out the actual date yet. I will go and check out the actual date, but we have two back-to-back earning. Okay, so it's gonna be quite for those who are holding all the short position, it's gonna be quite roller coaster ride lah. Snowflake was a very big roller coaster ride. I actually woke up 4 a.m. in the morning to quickly TP at the post-market price. Okay, so these are all the shots that we have. And then Starbucks, right? Starbucks, if you have not go into Starbucks shots yet, I think it is still possible. It's still possible. You are not too late yet. You can still go in, but maybe you may have to lower your lot sizing position a bit. It has gone down a bit already. So sorry, let me check. The original entry is at 92. Current price is at 91. So it has not dropped so far yet. So it's still very close to original price. If you want to enter this, you can still enter this. But please be mindful that our short position takes quite some time to hold. Okay, it's not today enter, tomorrow drop. So don't today enter, then tomorrow ask me why not dropping. Even for Rivian, right, when we enter here, right, it is not a straight line drop. Okay, in fact, it dropped, everyone very happy. Then when it come back up, right, a lot of people panic and start asking me should still hold or not, which I find it quite ridiculous, because if you cannot handle this, right, then it's quite hard to trade lah. Okay, so next, Mastercard. Just now Mastercard we went through already, right? When you are placing a Mastercard long position, right, we have mentioned many times that you are supposed to go half long, half short, that kind of position. So if your portfolio only have all the longs, right, then you are not doing something right already. So when market start to fall, right, your position is going to feel quite a lot of pain lah. So in this situation, I do not recommend anyone to enter Mastercard if you have not entered yet. But of course, when the trade setup came out here, or when I personally entered here, it is with the intention that market does recover lah, but it doesn't. But at least for me, right, I have a portfolio plan which has been shared many times that you should follow a similar structure, so that when it continues to fall and hit the stop loss, right, you are not in that very painful. But of course, if let's say market start to recover, everything recover, right, then it is good also. Mastercard will definitely recover, and most of your shorts will probably either flat, or if they start to go up by a lot, you can definitely exit at break even or exit at a small profit. We decide and see in the future lah. So we always have some plan in place regardless of how the market move. So what you will also notice is that even when the S&P was sideways for the entire week, right, our portfolio actually move a lot. So that is a indication of good portfolio management. So make sure that you don't look at individual trade like this one can buy or not, that one can buy or not, but rather try to look on a portfolio level also. So there are some questions regarding Google. Let's take a look at Google. Okay, so Google also similar to my Mastercard that when we initially make the trade setup, we hope that market can recover, but of course, since our market cannot recover, right, price is now back down. But currently we do have a good, hopefully we do have a good double bottom support here, and next week price continue to recover. But if it doesn't, right, then maybe it might break through the support and hit the stop loss lah. So make sure that you have short position, and if you do not have any short position right now, prepare for it, plan for it. There are still a lot of opportunity in March, in May, in April, in May. So go and get your margin account. If you're on Tiger, right, they give you margin account like almost on the same day itself lah. So please put in the effort, okay? Similarly for, I think that was one of the questions that I have. But I will not go for long here, right? If you have not entered, I will not go for long here right now. Maybe if it can recover here, then I may consider lah. I may consider to go in also. So let's take a look at some other counter also. Propnex kind of like trying to be funny. Propnex trying to be funny. It's like I'm just waiting for a big red candle to just zoom down like this, just that zoom down, but it is like gap up, close down, gap up, close down, and then sideways, not really doing much. But I do believe that this is the so-called the current top lah. I do believe this is the current top lah. But this one very hard to short, okay? Very hard to short in the sense that there are not many brokerage that allow you to short. So if you are not on Poem CFD, right, most likely you cannot short this lah. So for those who are new. Okay, so YZJ was one counter that shows up on the scanner recently also, and shipping and shipbuilding, right? It is one sector that I am currently looking at, but I'm still not very sure which one to trade, still looking through it. But YZJ is kind of okay if you want to go for it. You can safely place your stop loss here. Maybe 1.33 like that, or maybe even 1.32 like that. And hopefully you can come here lah. Hopefully price can come here lah. It's not really that great in terms of risk reward ratio wise. Also, if you are into the risk reward ratio thing, I'm personally not lah. And I think it is a discussion for another day. So maybe you can wait for, like, I don't know, price retrace, and then wait for a bullish candle and then enter at a lower price lah. This one up to you also. And another counter that was brought up to me by, I think, Megan or someone who attended yesterday's session, Fortress Mineral. Yes, correct. YZJ is STI constituent. I don't really like. Fortress Mineral. Okay, so Fortress Mineral and Southern Alliance. So I would like to thank those who bring this up, because my scanner missed it, but I managed to find out why my scanner missed it lah. So I think it is. I mean, I'm not going to fix that. I'm not going to fix that. But at least I know the reason why. So okay, so Fortress Mineral and Southern Alliance are the steel company. So if you are very observant, United Steel, US Steel also came out on US scanner on Thursday. So we do have this steel industry in play. But Fortress Mineral, right, it is a little bit risky. Between these two, right, I prefer Fortress Mineral. But it is a bit risky to play because you can't really put a stop loss at a safe location. You have to put it here. But this is too far already. This is too far and it is not worth the risk. And if you put your stop loss anywhere along here, right, random movement can just cut you out and go up. So if you want to like see an example of situation like this, right? For example, when you go to Golden Energy, right, you can see how this one go up. And if I turn back time, and put the chart like this, right? You can see how similar is this to Fortress Mineral. Very similar, right? And these are the kind of thing that so-called trading experience will give you. If you are in the market long enough, you will know all the funny pattern that stock market can do. So for example, if I were to trade golden energy here and put my stop loss here, I will definitely get stop out. And then right after I get stop out, right, market rally, and then now you are like sway lah, jinx lah, this lah, that lah, but no, actually not sway, not jinx, not luck, because you did not put a proper stop loss. But of course, we can't put a proper stop loss because it's too far. So for Fortress Mineral case, right, you can take a gamble. You can take a gamble knowing that you can still get stop out, but because you already know that you can get stop out, right, then there's no need to like place your stop loss here, like wanna be safe, don't want to be safe. Like you can go very aggressive, place it here. You can buy bigger lot sizing because now your stop loss is so tight. And if it continues to rally without coming down, right, then good, you are rewarded. You are rewarded for your risk. But of course, if it does come down, then you bite the bullet lah. And then if it start to rally again, like golden energy like this, right, then we go in again. So these are the kind of strategy that you need to keep in mind. You don't just like can go up or not, can buy or not, and then like don't have a proper plan like that. So this is the plan that I can recommend for Fortress Mineral. You can go for a stop loss at 450 lah. 450 I think is okay. 450 should be okay. You can go for it. You can go for it. If it gets stop out, then I mean, too bad lah. Okay, too bad lah. We wait for another recovery. Okay, it is one of the reason why initially when golden energy came out on scanner, I was a little bit reluctant and I went for Rex International instead, because they actually came out, I think, on the same day lah, Rex International and golden energy. Okay, so Southern Alliance, not really, mainly because how scattered the candles are. On some of the day, right, there are no transaction at all. The liquidity is quite bad, so I'm quite scared that if you buy in already, right, later you cannot sell because there's no liquidity at all. Whereas Fortress Minerals seems to have much better liquidity. It's not so scattered lah. And you can see for Fortress Mineral, right, there are quite a lot of attempt of buying in lah. Whereas for Southern Alliance, right, it is quite empty. Even here, the volume is not so much lah. So based on that, I will prefer Fortress Mineral. Okay, so on the US side, I am looking to long, as I mentioned just now, shipping company, right? The one shipping company that I mentioned previously was, I think some of you mentioned Zim. Unfortunately for Zim, right? I mean, this one personal preference lah. I'm not like Zim we got last time. Then we profit. And then the second time was hit with a stop loss. Second time was hit with a stop loss before hitting the profit. So here it was a case of a bad stop loss lah. Not optimal stop loss. But at this stage right now, right? I don't want to scare those with position lah. So this one is just my personal opinion and research, is that I was looking through their fundamental and they are kind of like in the growth territory. They are like a growth shipping industry like that, which is kind of weird. You can see how much revenue they are growing here. And in this industry, right, I think growth is not what I mean. I don't know lah. I'm not sure in what area are they growing. So as I was taking a look at the balance sheet, right, you can see that the liability is adding up quite high, and in a rising rate interest environment, have to be a little bit careful. And based on how high the price is right now, how high it is going up so high, right, I'm a little bit fearful that it might start to come back down lah. I mean, I don't know. This one is just my pure speculation. Okay, so if you are in the trade, right, you stick to your own trade plan. Okay, you stick to your own trade plan. They list the shit. So maybe that's why they are debt is very high. Okay. Maybe that's explain it. Yeah. So okay. Yeah. If you are in this long, right? You probably have done your own due diligence, lah. So personally, for me, right, I have not dig so much into this yet. So it is not one. Within my screening criteria in terms of fundamental, right? It is not one of the counter that does meet my screening criteria. So if it does meet your own personal long position, right? By all means, you follow your trade plan, lah. So one of the other shipping companies that I'm actually looking at is Kirby Corp. So I was looking at Kirby Corp sometime here already, somewhere around here already. And currently it is now going back slightly up. Now the price action is giving like a green light. So I'm still kind of like waiting for it. Like even the volume is increasing a bit. So I'm kind of waiting for it to properly poke out, properly poke out a bit, and then I see what I can do for this particular long position. Overall, still a little bit reluctant on long position, but maybe we can have one long position aside from MasterCard. Aside from MasterCard, I think Google not really good to enter right now. So this is one position that I'm looking at. And there's another potential shot that I'm looking at also for those who are like until now don't have any short position yet, and that is I keep missing entry point. Yeah, I think that's one of the I don't know, I think previously I always for now, right, you guys who have noticed, I hardly wait for price to come here or go there. I just enter at market price. I see this one good, this one breakout, I enter already, because in the past I always, okay, if it go there and then I enter there, end up always miss. So right now, right, I heck care already, I just market price, let's go. But of course, the reason why I will go in is that if the market price is not very high risk from my stop loss, or if I can place a stop loss that is quite okay from the market price, then I go in. If the stop loss is very far off, then I'll probably no choice, wait for the market price to come down. Thinking of your plan on MasterCard and Starbucks. Okay, so Celsius Holding. Okay, so Celsius Holding is one of the counters that I'm looking to short. I was looking at it here, this engulfing candle. Yesterday during our chit chat session, I mentioned all the fundamental aspect of Celsius Holding that I find a little bit funny, very, very funny on what they are doing, and hence my short bias lah. But not only that, you can see we have multiple lower highs, and I believe this to be the next lower high lah. So hopefully we can go to like 40 or maybe even 25, who knows. I think this one have quite a room to fall lah. Okay, so I think the current price now is a good price to short. I will probably post up official trade idea with the stop loss and short position. You can go for this also. So this is a energy drink, and if you do, I don't think this one will overlap with Starbucks, because Starbucks is more like a restaurant kind, like it has its own cafe, whereas I don't think Celsius Holding have. So if you have Starbucks and Celsius Holding, right, I think they are can be overlap lah. So can be overlap. So this one, look out for it. Okay, don't wait for price to go down and then like it can enter or not. Please don't do that. Okay, so next is Snowflake. So once again, Snowflake, right, I still think that Snowflake is still very overpriced compared to its peers. Is still one of the super overpriced counter lah. I still think it can go further down, but of course right now I'm not looking to jump in another shot at the moment. I still have that little bit of position left there, but I will add some more. But now just let the price digest the earnings, digest the volatility, and maybe it will recover a bit. Maybe it will close the gap a bit. Who knows, we let the price play out a bit, okay? So you don't need to scared this one will dive all the way down some more. So if it does dive all the way down, then let it be, don't need to chase. We can go for other stuff. There's plenty of stuff to short, okay? So Snowflake also can put it on your watch list somewhere. I think it's still very, very overpriced. And yeah, I guess that's about it. That's about what I've prepared. Let me see if I have any other stuff or not. Okay, builder first sources. Builder first source is one of the home building sector that we want to short because we were quite bearish on it, because previously, right, when we look at the home builder sector ETF, right, it does break through, and now it recover a bit, it recover, but it's still hanging around there, hanging around the support there. So if it does continue to be bearish or what, right, if it start to come back down, then we will see how it goes lah. So home builder sector is definitely one of the sector that we are looking to short also. It is just that the current price action for the builder first source is a little bit bullish. We don't want to run into that. Sorry, I always have problem finding my BLDR, builder first source. Okay, this one, builder first source. Okay, so initially when I was looking to short, right, price was somewhere around here. Then after that price drop, then I was kind of like tempted here, but I was like looking a bit, then I feel that if price doesn't fall below here, right, not really very good to short also lah, because you may think that this is like lower high, but it can actually become a it can actually be a higher low if it continues to rally lah. And currently now it does recover by quite a bit. But let's say if this continues to dive down and break through, right, then we have a lower high here already. We have a established lower high here already. Then we can short and then we can place our stop loss based on this lah. But at this current level, it's not lower high yet. You can just go up like that. So for this kind of situation, right, what I'm going to do is I'm just gonna like put this in my watch list lah, and eventually maybe put an alert here. Eventually, when it hit the alert, right, okay, I know this one can short really. Okay, so that's how you manage your trades and stuff like that also. The small volume spike, right? Normally I try to disregard earning volume spike lah, because earning volume, like always earning time, there's quite a bit of volume spike coming in. So you can say that it is a stopping volume, a lot of buyer coming in, but you can also say there are equally a lot of seller. So I mean, it's quite hard to say right now, but if in the future, if we keep seeing that price is having difficulty going above this area, right, then we can say that, okay, maybe now there's a lot of selling happening here lah. And then we can deduce that, okay, perhaps we can short this level already. But at this stage, we only have one candle after this big green candle, so we don't really have a lot of information yet. So volume, right, I realized that after my experience in US market for like the past few years, because I only entered US market quite recently. Previously, I was 100% Singapore market lah. So I noticed that the volume spikes are very common in earnings, which is not the same as Singapore market like that. For Singapore market, the volume spike can come anytime, and if they come in and non-earning period, right, it is like a very big flashing signal that you can trade already. But things are a little bit different from US lah. So I try not to read into too much of the volume spike on US market. And if you look at counters like PayPal, right? Like for example, PayPal also have a very big volume spike here. And then you can see that after the initial spike here, price actually kind of rally. And if you go and buy thinking that this is like what, stopping volume lah, this and that lah, you're gonna get caught here. So we don't want to make too much early assumption like. Even then when we see the other one here, right, it just dive all the way down. And even for other counters like Snapchat, you can also see similar spike here. Then now that the spike happened, right, then are we gonna say that this is a stopping volume, a lot of resistance, but it is actually green. So can't really deduce much information. And like you scroll out a bit, you can see the spike in all the earnings. Yeah, in this case, right, I think we need to dive into the fundamental aspect in order to see the guidance or the fundamental stuff rather than judging based on the volume alone lah. So that's something I learned about the US market itself. Okay, so wait, there's just now I wanted to share something. The Singapore market. Wait, let me go to Singapore market. So we can see all the coal counter flying up also. So Geo Energy actually flew up quite a lot yesterday, whereas Golden Energy took a short rest. So hopefully for those who are still in Golden Energy, you have not chicken out like me, right? Maybe tomorrow, on Monday you will have chance lah. Okay, so hopefully Monday Rex International and Golden Energy will have chance also lah. So yeah, so I mean, to summarize, right, you can see how Singapore market is dropping, STI is dropping, but we are still able to pick out good counters through like our scanner, through, I mean, I don't know your due diligence, but most of the time we are picking up most of our stuff through the scanner, especially for Singapore market, because the scanner is first designed for specifically for Singapore market. Is very optimized for Singapore market. If things does show up, right, most of the time you can focus in on it, look at the industry lah. Although I will say for US market, it is not as optimized as Singapore market, right? It does give you a very big clue on which industry are in play, which are the sector you should look at. Maybe you might not be able to buy the exact counter that the US scanner give you, but it does give you an insight into, okay, maybe I should focus into this industry. For example, like ever since early January, right, we keep seeing a lot of energy counters popping up left and right, left and right, left and right. Even until right now, the energy sector is still climbing up. So these are some of the tools that we have for those who are new, for those who are first timer into our Patreon webinar, right? Broad market can decline, the index can decline, but there is still a lot of opportunity to make from trading, be it long position or short positions. Also for Singapore, we are long on majority of our counters. The only short we have is Propnex, which is still not moving yet. But on the US side also, the market is flat for the entire week last week, but most of our short positions are still dropping. So what I want to emphasize is that don't just blindly follow the trades, but think through the process and think through how these trade came about. Like, why are we targeting specific sector, and why are we going within this specific sector? Why are we going into this particular stock? So for example, I made a 1 hour analysis video on Snowflake, why we went for that short. You can look at that on how the thought process goes, and it is a similar process for every other short trade setup that I do. It is quite time consuming, and I'm not sure that there are a few of you guys managed to listen through the whole 1 hour lah. So hopefully you managed to grab something from there. And it does require a lot of time for me to compare certain company across multiple peers and industries. So most of the time, right, I do take more than like 5 or 6 hours to come up with one counter to short. It is not like simply look and then okay, this one can short like that. So at least understand the process, because if you understand the process, right, you will know why this short trade is taken, and you will know why, and you will feel more confident in holding through. You'll feel more confident, more comfortable in taking the trade. If not, if things suddenly like recover, right, most likely you'll be panicking. You'll be like, hey, how, rather than just sticking to your trade plan. Okay, so that's the end of the webinar. Hopefully I have given you some guidance on what to do for the short counters that we are still holding. and what are the potential short that I will be still taking ahead. And of course, my overall view on the market itself is still more towards the bearish side. So try not to make any big trade and start bottom picking counter. Okay, so just be nimble for now. Make sure you have a 50% long, 50% short position. If you do not have short, go and get your margin account. I don't know, just get your account. Just get it. Okay, we are going to be shopping for a very long time, even if the market start to recover also lah. Okay, so have a good weekend, guys. Thank you. Good night.